At this webinar on the future of mega distribution centers in Europe. We are pleased that so many of you are here today to hear from experts what the future of mega distribution centers in Europe could be. My name is René Buck. I'm CEO of Buck Consultants International. And actually, this is the second webinar in a series of two. We had last week already, and I know that many of you participate in the webinar as well, a webinar on redesigning supply chain, as well as making a warehouse virus-proof for the future, a well-attended and well-received webinar. And today we are talking more about mega distribution centers, and although there are various definitions of that, we see that as distribution centers, warehouses with more than 40,000 square meters, so say 400,000 square foot. We will talk this afternoon about drivers behind mega distribution centers. We will talk about the location of these distribution centers, about sustainability issues, and we will do that with a presentation and with a panel. Just for you to know, we have put you on mute with your mics and your cameras to have no background noise. If you go to the bottom of your screen, you will find a Q&A button. So if you have a question or remark, don't hesitate to use that box. And I can see here on my screen, so pose later on tough questions to the panelists. Just for you to know, we will send you tomorrow a link to the recording of this webinar as well as the presentation, so that you have that information later on as well. Okay, what is the program? The program of today is that Kees Verwey, a colleague of mine, already for many years, partner in Buck Consultants, will give a presentation. And that presentation is a result of a research done together with a German real estate consulting firm, Bulwin-Gesa. Particularly Patrick Veltz, the head of research there, has joined forces together with us to look into what are the mega distribution centers in the logistics heart of Europe, so say Germany, the Netherlands, and Belgium. After the presentation, we have three distinguished guests, Ben Benetine, President of Prologis Europe, Jan-Dietrich Hempel, Board Director of Garber Industrial Real Estate, and Nick Preston, he's Fund Manager at Tritex Eurobox. So a great panel to be there. Why are we organizing this webinar? If you look to the profile of our firm, you will see that on the one hand, we work for manufacturers and in manufacturing footprint optimization, in location decisions. We work in supply chain optimization, helping retailers, e-tailers, logistic service providers with how they can perform. And we carry out location studies for companies who want to set up a new operation anywhere in the world. So we are headquartered in the Netherlands. That's where I and a number of my colleagues were born and raised. But as you can see, we have offices not only in the Netherlands, but also in Frankfurt and in London. We have own teams and offices in Shanghai and Singapore, and also in Atlanta and California. So as an independent firm, we try to be a leader in the industry, because the flip side of working for companies who have to make strategic and location decisions also, what does that mean for real estate? And in this case, what does that mean for industrial real estate? We were very pleased to be mentioned by Forbes magazine for a second year in a row, actually, a couple of months ago, as one of America's best management consulting firms, which underlines for us that profile of a global boutique, a global specialist, really works. Now, we try to be, and we are completely independent, working all over the globe, and have worked over the years for more than 1,500 clients in 50 countries. And that overview of the market is something we treasure by looking into the demand side and the supply side and making the bridge between the two of them. Now, I'm not going to talk about all these clients, but it gives you a flavor of what kind of companies we work for. You see here companies in life sciences, hot these days, with pharma, with medical technology. You see a number of our high-tech clients, industrial products, logistics. And what we do for these companies can vary from supply chain design to setting up a new manufacturing plant in Asia or in Europe. And the same goes for companies in the industries like food and beverages, fashion and apparel, obviously, with a lot of e-commerce and e-fulfillment, the automotive industry, and chemicals and materials. So those are the industries we work for. And in that understanding of how supply chains work and how distribution networks are being set up, a number of the companies you see here asked us to give advice on market and feasibility studies, on what is the best way to bring an asset to the market, or what is the value of a portfolio in terms of how does buildings and locations fit in supply chains. So we are pleased to work for these distinguished companies in market feasibility studies and co-creating new future-oriented strategies. Okay, with that, I want to introduce to you Kees Verwey. Kees is a partner within our firm, working here for many years, a recognized expert all over Europe. And as mentioned before, this presentation is based on a cooperation we had with Bulwiengesa. So Kees, the floor is yours. Tell us a little bit more about how the future of European warehouses develops, but also particularly the larger distribution centers. The floor is yours.
Okay, thank you, René, and good afternoon, ladies and gentlemen. I'm delighted to present to you the main results of our recent research study into the future of mega distribution centers of over 40,000 square meters in Europe. And for this study, we have teamed up with Bulwiengesa to collect and assess the growth of mega distribution centers in 3 European countries: Germany, the Netherlands, and Belgium. And together, these 3 countries are the heartland of European distribution activities, and they provide a fertile ground for the establishment of mega DCs in Europe. Well, just before COVID-19, the European warehousing market has been doing extremely well, with record-breaking realizations of warehouses in 2018 and 2019 in these 3 countries. There were 4 main reasons for this warehouse boom, which you can see on this slide. First of all, the European economy was growing at an unprecedented pace, with both consumer and business demands reaching new highs. Second, we also see that e-commerce rapidly took off, which led to demand for e-commerce warehousing in all 3 countries, with more room for packaging and return facilities. And also material handling solutions for the long tail. Thirdly, the number of American and Asian companies setting up European warehouse solutions was also at a high. And last but not least, the low interest rates made financial investment in warehousing very attractive. So unfortunately, COVID-19 stopped this boom in its tracks. Or maybe, is there a silver lining? Well, in the past few months, we have seen that COVID-19 has changed the European warehousing market, but it has not collapsed. Logistics has proved to be a critical sector in Europe, and e-commerce demands has continued to grow. Also, we have seen that the volume in, for instance, food retail has grown, while in other sectors like fashion, it has fallen. And in order to manage risk, companies have built up larger inventories, which requires more warehousing square meters. So all in all, the demand for new warehouses in Europe have been slowed down relatively little, and is much more volatile at the moment, which creates challenges, but also opportunities. Well, at BCI, we have seen that the different challenges for different sectors are in practice. In the fashion sector, you can see that there's a rapid switch in demand. There has been a dip and also maybe a rise in the future. And we see that both outlet and e-commerce channels require special attention for key players like Inditex, Hennes & Mauritz, and Primark. And we expect a moderate decentralization in this sector. In the medtech sector, we've seen a steady 5% growth, which enables players like medtech and Johnson & Johnson to look for more direct supply chains with sourcing from more nearby facilities. And in the pharma sector, a guaranteed delivery of medicine and medical supply has been a major challenge for key players like Johnson & Johnson and Roche and Pfizer, leading to a potential increase in the demand for regional warehousing. Well, before we go to the country-by-country analysis of Mega DC establishments in the past years, let's touch upon the driving factors for realizing Mega distribution centers. The major driving factor is economies of scale. It is, if you have the volume, it is cost-effective to have a Mega DC because you have lower cost per product, per SKU. A contribution factor is the rise in e-commerce, of course, next to traditional distribution channels. This requires extra space in the warehouse due to different ways of handling. Finally, we've seen that prime land is getting more scarce in Europe, especially in Northwestern Europe, and it's strategic valuable to obtain strategic land positions. So we have seen these three factors at work in all three countries. Well, let's look to the Mega DCs in Germany first. We have seen here 285 new Mega distribution centers in the past 7 years. Also looking at the announcements in 2020 and 2021. In total, this adds up to almost 90 million square meters of floor space. And you can see in the graph that there's a boom in new announcements at the end of 2019, fueled by the growth in especially e-commerce, with examples like Amazon and Zalando. Well, then if we look at the location of these new mega warehouses in Germany, we have seen that they're established all over Germany. The focus has been on the transport corridors from the Rhine to the Alpine, and also from the Rhine to Berlin and to Hamburg. But the Frankfurt area is the area with the most Mega DCs, with 18. But you can see that the Mega DCs are fairly spread over the entire country. Sometimes companies take advantage of available land and labor facilities in certain regions. Well, second in line is the Netherlands. Here we see a total of 98 new Mega distribution centers with 7 million square meters of floor space. And here you can see that there's a boom in the past few years from 2017 on. And especially in 2020 to 2021, this boom in end of 2019 is continuing. The boom is somewhat smaller than in Germany, and it could be due to the relatively scarcity of land in the Netherlands. Well, if we look at the location of these new mega warehouses in the Netherlands, you can see that the concentration is in the Randstad, Rotterdam and Amsterdam, but also in the south of the Netherlands, on the transport corridor from Rotterdam to the Ruhr area. And more than in Germany, we see in the Netherlands a concentration of Mega DCs in 3 provinces, the South Holland, North Brabant and Limburg. This creates hotspots, but also possible future scarcities. So last country, Mega distribution centers in Belgium. Well, here we will see we have seen 41 new Mega DCs with a little bit more than 3 billion square meters of floor space. It's more or less evenly spread over the past 7 years, you can see. So there has been a steady demand for Mega DCs, but not a big boom. Well, if we look at the location of these new mega warehouses in Belgium, you can see that it's concentrated in the Flemish part of Belgium, the northern part, and especially on the transport corridor from Antwerp to the German border. If you look to the balloon, to the French area, the lower side of the map of Belgium, we have seen that a smaller amount of Mega DCs has been realized, but in recent years, the share of this region has slightly grown. So this reflects the potential for new Mega DCs also in this area for the coming years. Well, if we then look to the total picture of the 3 countries, you can see it here. In total, we have 424 new Mega DCs from 2013 up to 2019, and in end of 2019 announced for 2020 and 2021. And you can see that it's spread all over the region. You can see the transport corridors from the ports of Antwerp and Rotterdam to Germany, onto other destinations in Europe. But you can also see that, especially in Germany, it is spread around to different regions, taking advantage of local area and labor markets. Well, if we look at the tenant types of these more than 400 Mega DCs, we've seen some interesting trends. First of all, the number of etailers in these Mega DCs. In Germany, 1 out of 8 of all Mega DCs tenants is an etailer. While in the Netherlands and Belgium, this share is less. It's about 5% of all Mega DCs. And a major reason for this could be that Germany is a preferred location for multi-country e-commerce Mega DCs because it's located more centrally in Europe. Well, second interesting point that we can see if we compare tenant types is that in Belgium, a quarter of the Mega DCs is used by a manufacturer who has built the Mega DC on his own account. While in Germany and the Netherlands, a much bigger share of the Mega DCs are for logistics service providers and retailers and e-tailers. Only a few are manufacturers. And we are expecting that the specific business culture of Belgium is the driving force in this. And finally, in the Netherlands, we have seen that the number of multi-tenant Mega DCs has increased substantially in the last years. And it's also quite specific for the Dutch market. And the reason is that the Dutch warehouse market has been very profitable the last years for such solutions. Well, just recapping the growth in the number of Mega DCs. Here you can see the difference between the period from 2015 to 2017 and the recent period from 2018 until now. You can see in that in total there's a 57% growth in the number of Mega DCs in the last years. And this growth is especially in volume in Germany. You can see that there's a 50% growth. And if you look at percentual, there's the biggest growth in the Netherlands. You can see a doubling of the Mega DCs in the past years compared to the period from 2015 to 2017. In Belgium, it has remained the same. It has remained stagnant. Well, we already touched upon these differences. For instance, the rising e-commerce in Germany, and that is the main driver for these differences. Well, we also know which regions are the Mega DC hotspot winners, and you can see a list recap here. In Germany, we've seen that it is more evenly spread across the regions. North Rhine-Westphalia is the main land with the DCs, but also Niedersachsen and Bayern and Hessen are doing well. You can see that these are the lender in the west and also in the south of Germany on the European transport corridors. In the Netherlands, we have seen that 3 provinces take the majority of the Mega DCs, South Holland and the 2 southern provinces of North Brabant and Limburg. And also in Belgium, these are the provinces on the corridor from the port of Antwerp towards Germany, which are winning, although Liège is climbing up in the ranks. Well, what is the conclusion if we look at the competitive positions of the different countries in attracting Mega DCs? Well, you can see from the geographical positioning and the infrastructure, there's not much difference. We think that all 3 countries have shown that they are capable of attracting Mega DCs and that the geographical position and infrastructure is well in order to facilitate them. If we look towards the availability of space, of land for new warehousing, this is becoming a little bit scarce in the Netherlands. While in Germany and Belgium, there's a little bit more space, although it's always, well, quite difficult to find the right spot for your Mega DC. It takes a lot of consideration. If you look to the labor market, you can also see that the 3 markets are a little different. Germany offers, at the moment, the best overall possibilities in availability and cost of labor and also in the labor conditions. and Belgium and the Netherlands are following close behind. Now with the COVID-19 situation, of course, the situation is changing quite rapidly. And we think that all in all three the countries have good possibilities for keep on attracting Mega DCs in the near future. So I come towards our conclusions in the last two slides. We've seen that the drivers for increasing size of DCs are not losing value. Although we have COVID-19, we can see that still the demand for logistics stays in place. Maybe it has fallen a little, but for certain sectors, for instance, for food retail, for pharma, there's still large demand. And well, if we look at, for instance, safety inventories, the decrease of risk, people are still building DCs, and we also expect that this growth will continue, although in a smaller pace. And in 2013 to 2019, we have seen more than 400 Mega DCs were set up, announced in the logistics heart of Europe. Well, we expect that this will continue. Going to my last slide, we have seen that in the past few years there was an acceleration in growth compared to 2015 to 2017. We expect this growth pace will slow down, but there still will be demand for Mega DCs. And the challenge is that finding the right location for your Mega DC, also getting the right labor supply, and is important. And also Mega DCs face increased demands from the public opinion. Are Mega DCs needed? Well, we think logistics is a crucial sector. Mega DCs makes it possible to do logistics efficiency quick and good. And we are looking forward to the 500 Mega DC in these three countries in the coming years. So that's it for me from now. I'm looking forward to the discussion about these topics in the webinar. Thank you.
Thank you very much, Kees, for this presentation. Let's say there are a lot of statistics, but particularly this focus on large distribution centers is interesting to see what the results are and how they vary per country. So let's discuss the future of these mega distribution centers. And we will start with the first I would like to invite here is Ben Benedine. Ben, are you there?
I'm here, Rene. Yep.
Hey, great to hear you. To hear from you, ladies and gentlemen, Ben Benedine is President Prologis Europe already for many years, I believe 12 years after the University of Aberdeen finished. He worked at various companies, but for a long time now already within Prologis. So Ben, let me start first by sketching a minute the current situation of Prologis, and then I will try to pose you some more tougher questions than this one.
Okay, thank you, Rene. So yes, you're correct. I've been with Prologis for 12 years. Initially started running their Central European business based in Warsaw, and then relocated to Amsterdam almost 5 years ago, actually, to run the European operations. So I am delighted that logistics real estate has finally become the darling of the real estate sector. It's taken a long time, but we are finally there. And COVID, the pandemic, clearly has accelerated that trend. So business for us is really good. Clearly, we are not immune to what's going on, and obviously there are, depending on countries, there are various issues. But generally, business has continued. We had a very quiet March, April, May. We put development on hold, or at least speculative development. But since the end of May, things have started back up. Our portfolio in Europe is about 18 million square meters, so covering 720 buildings. And on average, our occupancy is about 96.5%. But in some markets, we are literally 99% leased. So extremely strong demand has continued. The the softest markets probably we've seen to date are Spain and maybe Poland. But generally, the 12 countries we're active in Europe are all working well.
Okay. While we are looking here at your distribution center in Silesia in South Poland, you mentioned already COVID-19, Ben, and what types of tenants have done relatively well, but also what kind of tenants have done relatively bad? Who were the winners and the losers within all your tenants all over Europe?
So I mean, to start with the ones that have been struggling, clearly automotive has been a challenge. So not just the Dieselgate scandals of a few years ago, but electric EVs, supply chain disruption, obviously because of COVID. If you wanted to try and buy a Mercedes SUV in Europe in the last couple of months, it was almost impossible, because they were made in the US, and there was problems obviously with transport and delivery. So the automotive industry has been hit hard, I would say, across all sectors, and that obviously has a impact on all their suppliers as well. So we've seen that in Central Europe, we've seen a bit of that in the UK. Anything to do with the airline industry, again, clearly very difficult. So those who are providing food, for example, to the airline industry, massive growth business over the last few years, but literally in the last couple of months, stopped. And again, anything to do with supplying the hospitality industry, has clearly been a challenge. Fashion retail suffered really badly in the first couple of months of COVID, but actually ramped up significantly again. And then the real winners clearly have been e-commerce, and that's e-commerce across all sectors. So we've really seen an increase in demand. So existing customers adding e-commerce to their portfolio and then growing, or dedicated e-commerce players such as Amazon, for example, obviously rapidly expanding across Europe. So e-commerce is clearly the driving force. It has been for a number of years, but COVID has certainly accelerated that. And probably the biggest winner in terms of e-commerce would be grocery. Grocery was finding it extremely difficult to penetrate on e-commerce, but that has changed significantly, particularly in the UK, and we're seeing that now right across continental Europe. So e-commerce penetration was forecast to be around 11% of all sales. That has now been reforecast over the next couple of years to 17.5%. Yeah. And if that forecast is correct, that requires an additional, we believe, something like 12 to 13 million square meters of distribution space, incremental over and above what is already required in the market.
Square meters in the next couple of years to accommodate the growth in e-commerce. Is that what you're saying?
Correct. Yeah, 12 to 13.
And will these be mega distribution centers, as that is a little bit the focus of this webinar? We know that a lot of these mega distribution centers, as Kees showed, are in the e-tail sectors. He also analyzed together with his colleagues where they are locating. How do you look at that? What are, in your view, the top countries for companies to set up a large distribution centers? What are the favorites, and what are the ones where you say we don't see too much chances there?
So across our portfolio, I think since the beginning of 2019, we've delivered, I think, 42, 43 buildings, something like that. And the average size of those was around 25,000 square meters. So that seems to be the sort of sweet spot. But out of those 42, I think 6 or 7 were what you would describe as mega DCs, so 40,000 square meters plus. Yeah. But honestly, there was no real trend as to location or sector. So for example, we're building up 100,000 square meters for Jaguar Land Rover in Solihull in Birmingham, or next to Birmingham, which is a parts to supply their factory. We built a European distribution center for L'Oreal in Germany. we built or are about to build 100,000 square meters for a big retailer in Paris. We've built a couple of large distribution centers in the Netherlands. So really, it's been right across our geographical portfolio. But I think the most interesting areas today, certainly two of the ones you picked, Netherlands and Germany, is where we would see the most demand currently for the sort of mega DC 40,000 square meters plus.
And in the analysis was shown that the last couple of years we see an acceleration of the establishment of these super warehouses. Is that a trend you expect to continue, or is this only for the next 2 years and then we will see a decrease? In other words, the drivers behind these economies of scale in warehousing, do you see that also among your tenants? And what do you expect that the trend will be, say, the next 3 to 5 years? Will we see that continued growth of more and more large distribution centers?
So I think we're going to continue to see demand across all markets in terms of size, or all segments. So we've segmented our portfolio into 4 categories. Basically, last touch, which is really last touch, last mile, and for us in Europe, that's really London and Paris being the largest population centers. We then have city distribution, so where you can have a distribution center and you can effectively distribute into that city or population center within a day. And then you have the sort of regional multi-market, which would be these sort of mega DCs. So multi-market or regional. So that's really where the big distribution centers are going to be focused. So that may be in the ports or the intermodals. So we have like Delft in the UK, Le Havre, Hamburg, for example. And I think they will continue, and clearly the economies of scale, the bigger you get, the better. But 100,000 square meters is probably where that stops. So I guess between sort of 40 and 100,000, we're going to see continued demand. But one of the biggest challenges, and certainly what we're finding, Germany would be a great example, trying to acquire land or find land where you can get entitlements for such a large scale distribution center is extremely difficult. So that's one of the biggest, I would say that's one of the biggest challenges and one of the biggest headwinds. It's not the demand, it's physically being able to supply such large scale distribution centers that's going to be a challenge. Okay, well, thank you for that. Let's go to Jan-Dietrich Hempel. He is the board director of Garbe Industrial Real Estate and knows the German market like nobody else. So all difficult questions Ben is posing, Jan-Dietrich, you are the guy to answer them. But let us first introduce Jan-Dietrich Hempel a little bit better in detail. He's board director at Garbe Industrial Real Estate. And Jan-Dietrich has really a career made in the logistics industry. He worked for Bex Global, for Hermes Fulfillment, for Thyssen Haniel Logistics, so he knows the industry very well. Before passing on the question of Ben to you, Jan-Dietrich, highlight a little bit in a second or two, what is Garbe Industrial Real Estate doing? What are your type of services? What is your geographical reach?
Yeah, thanks René for introducing me. Yeah, Garbe is not only a developer, but an important investor running own funds. You can see the figure here, assets under management currently 3.5 billion euros, growing fastly. Still pretty much as a footprint suggests, the majority of the 150 buildings concentrated in Germany, but spreading fairly quickly to long ago to the Netherlands, obviously, is one very important market, and now increasingly to France and Austria and so on. But still a family-owned business with long-lasting experience, probably amongst the competitors in Germany pretty early on. The development side, we have currently some 800,000 square meters under development, and our client base on the development and tenant side is really ranging from medium-sized logistics operators, now also including the major players in e-commerce. So Amazon would be one of our biggest customers, with a multi-story building of some 130,000 square meters now under development at Bremen. What you see in the picture is a quite interesting one. Eschweiler near Aachen, Western Germany, 105,000 square meters. Pretty interesting example, because this is now operated by a medium-sized company. So these big to very big sheds are not really limited to tenants like DHL, Kühne+Nagel or others, global operators, but also to the German Mittelstand, which is an important customer of ours, and is still, even though the big companies make the headlines most of the time, are still the backbone of logistics in Central Europe.
Okay.
So,
if you, Jan Dietrich, saw in the analysis of case on these mega DCs, Germany is #1, a large number of new supersize distribution centers, 19 million square meters in a short time of period, and an increase of 50% in the last 3 years. Now, Ben already said, well, it's in Germany not a question of demand, but of supply. You know the German market very well. How do you see the future of large distribution centers? Do you see them still being established the next couple of years, or are the restrictions in land availability so strong that demand can rise, but supply will be nearly nil? How do you judge that situation?
yeah, there's not one single answer to all of Germany, because it's not a very big country, but there are very distinctive regions. If you look to Western Germany and Southern Germany, like the hotspots Munich and Stuttgart and so on, down there, it gets extremely difficult, if not impossible, to establish at least sheds like this one here in Eschweiler. And this has different reasons. Obviously, political ones, the restrictions of local communities who have the choice, or they think they have the choice amongst industries to pick from to sell ground to. Logistics is certainly not the first pick, but it's also for topographical reasons. I mean, having a 100,000 square meter shed on a 150,000 square meter plot, you can't do that much cut and fill in Stuttgart to come to this sort of size. And that's why these mega places, what you see in the picture here, is maybe one of the last examples in the Dortmund area, where we found a plot of some 450,000 square meters. You will not find that again anywhere soon. So one of the last chances with Amazon taking up here some 80,000 square meters of shed in the middle, as you can see from the coloring of the buildings. So this is going to be difficult. What we see now, Amazon being the leader here, the multi-story buildings are one answer to the problem. There is no limitation in terms of economies of scale. I think there could be even bigger sheds if the situation would allow. The largest or the most important opposition we have to deal with is public opinion in many places.
I will come back to that later on. Just to, as you said, the hotspots for these mega distribution centers are in the western part of the countries. What will the future map look like? Do you see new emerging logistic hotspots coming up outside the typical North Rhine-Westphalia, Frankfurt, Stuttgart, Hanover, Braunschweig?
Absolutely, and it's already showing. The Leipzig area, Magdeburg area, logistics is sort of adapting to the situation. logistics is accepting that they have to be a little bit off the hotspots and go where nobody else goes that quickly. But also we have to sort of distinguish between different types of logistics. If we look at the e-commerce sector, you can, if you want to deal with consumables, logistically small articles, no furniture, then you have no problem if currently you still need a certain labor force, but automation is advancing quickly in these areas, and labor force, which used to be a limiting factor over the last couple of years already in many spots in Germany, won't be that much of a limiting factor in the future. Yeah. As long as we need a lot of labor force, and you see this in this picture here as well, there's a big parking lot. There should be a shed instead, and I'm quite confident that in 10 years' time, latest, there will be a shed instead of this parking lot, because there will be fewer people working in these sheds. Mm. So it's a multitude of trends to watch, and it's if we look at the asset class, it's sort of redefining itself currently. One factor being the very fast development of e-commerce, but also the necessity to think logistical structures and processes anew, because they can't be based where they used to be based, because there's not the space anymore.
Talked about multi-story. Final questions for this short interview. What are good examples in Germany of multi-story solutions? Are they already there, or is it still everybody thinking about it and dreaming about it? Or do you see already a number of multi-story large distribution centers being realized?
There are the first multi-story buildings being built, and there's this sharp distinction between e-commerce, where multi-story makes sense, wholly different building type, and what we still see a bit skeptical, first examples being built south of Hamburg, piling up conventional logistics, as I might call it for the time being. So what we see normally being processed in these sheds here in the picture in Dortmund, one pile being piled on the other. This is extremely costly to build, and it creates a lot of pillars inside, so that the logistical processes are not as easy to be organized in these buildings as in the traditional ones.
Okay, well, thank you very much for those answers. Let's go to our third panelist. That's Nick Preston. Nick is fund manager at Tritex Eurobox. He worked for 20 years for CBRE Global Investors, a number of years at Grosvenor Fund Management, and now since 2017 he's fund manager of Tritex, a London Stock Exchange listed pan-European logistics fund. Good afternoon, Nick, to you as well.
Good afternoon, René. Thank you very much. Shall I just kick off with a few words about Tritex Eurobox, and then we can carry on the discussion after that. As you say, René, Tritex Eurobox is a listed real estate investment company focusing on large format logistics properties in continental Europe, with a focus on the northwestern part of Europe. We currently have exposure in 6 countries, 12 assets, and a portfolio size of around 820 million euros. We are looking to capitalize on purchasing and investing in these assets for the long term, looking at the shortage of supply and demand dynamics that we have been talking about and hearing about, and seeing rents growing, scarcity of land supply leading to the demand imbalance between the demand supply imbalance, leading to further upward pressure on values. You can see here on this slide the locations where we are at the moment. As I said, we have a concentration in Netherlands, Belgium, and Germany. We also have an asset in Spain, 1 in Italy, and 2 in Poland. We focus on key logistics locations driven by population centres and infrastructure and power and data connectivity. And what we're looking for is to build up a portfolio in the long term that is very resilient with very strong growing income streams, benefiting from the indexation which we see in leases in Europe, but also being able to add value to our properties through careful expansion and piecemeal development where appropriate on our sites, ancillary to the existing properties.
You see, Nick, the requirements, while we are looking here at your Action Mega Distribution Center in Germany, do you see the location requirements for these mega distribution centers change? Or is it still geographical positioning, good infrastructure, near population areas? Do you see changes in the location requirements if companies want to set up a super shed?
I think that, and as Jan Dietrich just said a few minutes ago, that change is slow, but it is happening. But I think a lot of it is driven by the individual occupier and what their business model, what works for them. If you're talking about Action here, which is near Hanover in northern Germany, this covers the northern German retail footprint of Action, and this is well located for them. However, if you're talking about some of the e-commerce retailers, then they need to be very close to the big population centres, and therefore the markets further west to in Germany are more appropriate. And so therefore the North Rhine-Westphalia and going south down the Rhine are very important for them, because that's where the population is. But for the likes of Action, it's all about the infrastructure. It's being located between Bremen, Hamburg, Berlin, and North Rhine-Westphalia, and therefore that is a key location which is why they're located here in the Hanover region. But I think that the changes will be slow. They will be slow because ultimately the fundamentals are all about the population centre, and that's for customers and for workforce, labour force. But I do agree with what Jan Dietrich was saying, that I think that we will see an evolution and more automation coming in, which means less workforce required, but more skilled workforce. But then the amenities in the buildings also need to be good, and that's an improvement that we're seeing. A good example of that, you've put up the picture here of the Amazon outside Rome. It's a very, very high quality working environment that Amazon have here. It's a key location for them near the very densely populated city of Rome, and this works very well for them.
Now, you are a fund manager of and the name says it's a big box fund. Now, if I would be a potential buyer of shares, why would you not recommend to buy shares in a fund with services, big boxes on the one hand, and also urban logistics centers? Why would you, what are the convincing arguments to say, well, just focus simply on big boxes only?
Let me, I think that I'll refer back to how Ben described the market, and I agree with his division of the market. To last touch, city distribution, and then the regional multi-market. I would say that we focus on the city distribution and regional multi-market, and by that I mean we are located close to large population centres, and we have the regional footprints of the Action, for instance, that you showed a moment ago. We, at the moment, have not bought that many. We have one or two assets close to city centres, but generally speaking, the buildings outside most cities in Europe can cover the distribution right into the heart of these cities quickly enough for the occupiers. And again, I'll agree with Ben here. I see that the only two examples where this model doesn't work in Europe are London and Paris, purely because of the size, the congestion, and the infrastructure there. And therefore, that true urban logistics piece really, to my mind, only exists in those two mega cities. Other cities, and you're looking at Frankfurt, Hamburg, Lyon, you can reach the center of these cities in a relatively achievable time space for a last mile drop from an online retailer, for example, or from a 3PL.
On the other hand, let's say all over Europe, we see big cities beyond than London and Paris, because that's a special league, I would say. You see a lot of urban logistics initiatives, new distribution pattern to deliver shops as well as inhabitants, setting up last mile, last touch distribution centers. Is that an all crap?
I think that by the fact, Rene, that you have just said that this is a new thing that has just come along, demonstrates the point that all of this final mile piece is evolving and it is changing all the time. And it wasn't here 5 years ago, and I would say that in 5 years' time, how final mile works will be different than what it is today. And you have to bear in mind that for all of these, in particular the omnichannel e-retailers and grocery in particular, that this final mile piece is a very, very expensive operation for them. It is where a huge part of the cost and profitability goes. And I see that the retailers, from the retailers that we talk to, that they are always aiming to try and change, to evolve this, to reduce the cost, and also to get people back into stores where they can always upsell. And so, yes, I think it will evolve.
My question to Ben is, let's say when I was saying to Nick, is that urban logistics initiative crap, I saw you laughing, so explain why you were laughing.
I mean, clearly there is an increase in demand for logistics space closer to the consumer, so it is being driven into the urban areas. But that kind of real estate has existed for many years. In every major city, there are a number of what we would have called trading estates or industrial estates, where you had a man with a van who was doing his stuff around the city. And the majority of that space, which is now being classified as, you know, last touch, is literally industrial, older stock that's really got nothing to do with e-commerce. But it is in great locations, and we would buy it all day long, because the downside is you don't get planning to refurb or to redevelop. But the risk is minimal. It's either going to go for residential use, office use, retail use perhaps, but there's a number of other uses that can, you know, use that that ground in those urban locations. So urban infill is a great strategy for real estate, regardless of whether it's for last mile, last touch, or just a real estate covered land play.
Let me open up this discussion with all of you, and particularly I want to focus on the fact that it looks like that the public opinion in the Netherlands, in Belgium, in Germany, in the Czech Republic, see now what's happening in France, that it's becoming more and more difficult for real estate developers and investors, for companies who want to set up their own large distribution center, just to find the land. Jan Dietrich, particularly in Germany, that's also the case. How do you see a solution for this? Is this lack of lobby, or is the public just right in saying, okay, why do we need all these large sheds who disturb our landscape, and we need people from other countries to fill in the labor shortages? How do you see this public discussion evolving the next years?
It is heavily affecting logistics already, and I don't expect it to change anytime soon, because this not in my backyard attitude obviously is rather on the rise than going away. And as long as we have politicians who want to win the next election, there will be limits to action otherwise. Having said that, we talked to a lot of city administrations. There are a lot of workshops lately over the last 2 years, because the traffic problems in the larger cities and throughout Europe basically are getting so teething that they need to find a solution. And they accept it, or at least those of them I've been talking to and been in workshop with, are now a bit hesitantly accepting that they need to make logistics space available in the cities. It's a slow-moving process, but you know, to support this idea of last mile, or whatever you might call them, facilities anywhere near a city center, if you are an investor and have the chance to lay your hands on such an opportunity, then jump at it.
Do you see a solution? Because particularly for these very large distribution centers, it's not always easy to find a brownfield location, right? And you could say, well, if all 100 cities in North Rhine-Westphalia say not in my backyard, then we have no backyard in North Rhine-Westphalia anymore. Is there a solution possible or not?
I think there is. In Germany, over the next couple of decades, automobile industry is a big thing still. We saw a decline in demand for automobile warehousing space already. I think we'll see in a couple of areas that automobile industry is not expanding, but will be shrinking to some extent. And there are other industries still which are shrinking, like steel, like others. So, especially in North Rhine-Westphalia, over the next decades, there won't be a big supply of brownfield plots, and they will get increasingly expensive to make them reusable for logistics use. But there will some supply. I have no doubt.
And Nick, just a question for Nick in this respect. Apologies. A lot of people see these large sheds, but on the other hand, we see also that a lot of investors put effort into the sustainability of the building. In that public discussion, do you think that the efforts of logistics real estate developers and investors to decarbonize logistics and to build sustainable buildings, more underlining of these efforts, would that help in that public discussion?
It's more a qualifying factor in future. Is not.
Just wanted to ask the question also to Nick.
Yeah, sorry.
Thank you, Rene. I think it's essential. I think it is essential. I think that we talk about sustainability. I would say that the sustainability is vital to ensure that we sustain income from these properties into the future. Energy saving is but one thing. It's also how, from an operational perspective, these buildings are attractive to the workforce. There are huge parts of this, and also obviously, just like Jan Dietrich was saying, it is appealing. It is helpful and appealing to for the zoning and permitting for building these properties. And so I see that nobody seems to argue with this. We have no choice but to adopt a higher threshold for ESG, and I would say that the German market is a great example of that. The properties that we own in Germany are very, very high caliber on the ESG side of things. And so I see that also from an occupier's perspective, the whole going to be zero carbon, all of this type of initiative, whether it's the occupier, whether it's us as an investment company, that is an ambition that we all have to aim for, and therefore we have to build more sustainable buildings and invest in them throughout their life to ensure that.
Case, I have a question for you as well. One of the questions which were raised here in the Q&A box. It seems like the difference between a split in thoughts. On the one hand, you show that the competitive position of Belgium is relatively well, and on the other hand, we see that in contradiction with Germany and the Netherlands, Belgium was in the last couple of years more or less the same than the period before that, while the Netherlands and Germany showed a rapid increase. Can you explain why the positioning and the starting position looks great and the results are not that huge?
Oh, thanks, Rene. And yes, I think there are a few reasons for the stagnant growth in Belgium in the number of Mega DCs. And one of the reasons has to do with the labor market, especially in the past. The labor market in Belgium is a little more difficult in logistics, for instance, in the number of strikes, but also in the working during the night. Now the regulations have been softened and it's more competitive, but this is a reason that in the past the growth was not that big, especially for etailers. Second, if you look at Belgium, availability of land was also not that easy, because there's land available in Belgium right now, but some of the land had to be restructured. And that has been taken place in the past few years. And now this land is available for the large mega DCs, but you know, the realization still has to be come off the ground. And the third reason is that the participation of local authorities or regional authorities in the past could be improved. Well, they clean up their acts right now, and I think that Belgium has more possibilities in this. So I think for the future, there will be a challenge. There will be more opportunities in Belgium, and they have potential to increase the number of mega DCs.
Okay. A better question for you here. You mentioned that Prologis invest in various categories of DCs, from smaller urban logistics centers to the big warehouses, the mega distribution centers. How will lead time changes impact in what kind of investments and what kind of assets you will invest? And I think that the person who raised this question means, if the lead time, the time you need to bring your product to the client, whether that's a company or a wholesaler or an inner city shop, if that lead time reduces, will that not change the structure and the locations of the various distribution center in that scale you are investing in?
I mean, we are very customer driven, so we're not investing or developing buildings just for the income. I mean, that is a product, obviously, of it, but we are literally building, product for our customers, and therefore we will go where they drive us to. So we are seeing, as I say, we're invested across all sectors, and that's driven by our customers. It's not a choice of ours, but they want to be in cities, urban, and they want to be in big box. So we do, we cover the whole. In terms of the lead time in getting these projects off the ground, do you mean in terms of permitting, etc.?
What the person who posed this question means is the time to deliver the order. So the time between
yes.
order and, on the other hand, receiving it, whether you are a company or an inhabitant, that seems to be shrinking all the time. And
absolutely.
I think the question is, will that change different types or locations of distribution centers?
Yeah, so I mean, we changed our whole investment strategy over the last, 5 to 10 years, which we had invested quite a lot at the production end of the supply chain. But we realized that production moves and can move continents pretty quickly, whereas consumers tend not to. And therefore, a much smarter end of the supply chain for our customers and for our point of view is to be closer to the consumer. So everything we're doing is driven at being closer to the consumer, but you still need the variety in terms of size. And literally, you can't get a 100,000 square meter distribution center in the city center. So you are driven to certain locations. We will see multi-story. There's a number of different initiatives that we're investigating and seeing others investigate as well. So it will change. There is clearly a drive to be closer to the consumer, but there are many constraints around that.
Okay, I have one short question for Ben before I have a closing question for everybody. There is a question, and I can guarantee the audience it's not coming from a Prologis employee. Ben, you just have to answer the question with yes or no. Will Prologis publish this year another logistic heat map of Europe? Yes or no?
Yes.
Okay. My second question would be, but that's not here, will Buck Consultants make that for you? But let's talk about that offline. Now, my final question to all of you is, summarize in 30 seconds, how do you think that the mega distribution centers, how that market will evolve the next year? So 30 seconds is not that long. I have here a timer with me, so I'll cut you off right away. So I start with Nick. What are your final thoughts on the future of mega distribution centers in Europe?
I think that my final thoughts are, listen to the occupiers, be near consumers, buy large, flexible, well laid out buildings, good infrastructure connections that can be suitable for a wide range of different occupiers in the long term. These buildings suffer low obsolescence and are very good long-term investments.
Okay, that's.
Is that 30 seconds?
You have 2 seconds left, so you can smile to all attendees while I turn over to Jan Dietrich. Jan Dietrich, what are your final thoughts if you talk about the future of mega distribution centers?
The number of mega distribution centers will definitely grow, even under difficult conditions like in Germany. They will be more likely to be multi-story. They will be more likely to be built in areas where, which were up to now not considered to be logistics hotspots. And they will continue to vary in layout and overall design. But the square meters are growing.
Wow, it's really good possible if you ask people to summarize it in 30 seconds that everybody does that. So Ben, the bar is high. Your final thoughts in 30 seconds on the future of mega distribution centers.
The future is extremely bright. I think the pandemic has shown the public and indeed the politicians that logistics is not about real estate, it's critical infrastructure, and a country simply cannot run without it. So I think we will see some relaxation of some policies, and I think the mega distribution centre is here to stay.
I guess that you are not waiting for a COVID-20 or 21 situation, right?
No.
Okay, well, ladies and gentlemen, we have come to the end of this webinar. First of all, I would like to thank very much Kees, Jan Dietrich, Ben and Nick for your valued contribution. As mentioned in the beginning, we will send you the presentation of Kees and also the recording of this session so that you can see it back if you are interested to listen again to the views of our esteemed panelists. We were very pleased that all of you participated this afternoon. So thank you very much. Stay tuned to the series of webinars BCI organizes. So if you follow us on LinkedIn or on our website, on our YouTube channel, you will see various topics also the next couple of weeks which might be of interest to you. So thank you very much for your valued time. Hope to see you next time. Bye-bye.
Thank you, René.
Bye-bye.